All right. As of yesterday, after we are done with our price action, sorry, after we are done with our support and resistance, so we move into price action patterns, or you can call it price patterns, and we end up this talking about some various price patterns we have. And at the end, we started with triangle patterns, which we kicked off with symmetrical what, triangles. Now, yesterday alone, we were able to cover bullish symmetrical triangle. And today we're going to try to cover on bearish symmetrical what, triangle. Right. So before then, I would like to entertain a question. I would like to entertain questions based on yesterday price pattern lecture. I believe after yesterday, you all must have tried to identify those patterns in your charts by yourself. Try to master and understand better on how the price pattern structure used to look like. So if you have any question, I'm open for questions before I will continue. Any question? Okay. It seems there's no question. So in the meantime, I would like to share my screen. All right, so if you guys can see my screen. Can you guys see my screen?
Not yet.
Can you see my screen now?
Yes, now. Yes.
All right. So let's head over to our book. So yesterday we were able to cover symmetrical bullish triangle, and there is one more symmetrical triangle that we need to discuss, which is known as what? The bearish what? Symmetrical triangle. So this triangle, there is nothing different between it except that what is a vice versa of what? Bullish symmetrical triangle. So a symmetrical triangle breakup pattern is identified by a distinct shape created by two converging straight lines, symmetrical in what? In nature. The pattern is formed by two trend lines that connect a series of sequential highs, just call it highs. Okay, sequentially higher swings slash pivot lows, okay, this is lows, and a series of sequentially lower swings slash pivot highs, which is highs. Price action is largely contained within the triangle formation, and traders typically look for buying opportunities once they break out above the upper trend line of the triangle. All right, this is just talking about symmetrical what? Triangle. So, but once you want to discuss on bearish symmetrical triangle, this means that it must occur in the context of what? A downtrend. Like I actually said yesterday, I said yesterday that symmetrical triangles are actually continuation patterns. So use a bullish symmetrical triangle to identify continuation of an uptrend. Why use a bearish symmetrical triangle to identify a continuation of what? A downtrend. All right. So if you are seeing a symmetrical triangle on a downtrend, that means there's a possibility for you to what? Break out the support. If I see a symmetrical triangle on an uptrend, that means there is a higher possibility for you to break what? The resistance to continue that what? Uptrend. Like what you are seeing here is how what a symmetrical bearish triangle used to look like. And I'm going to try to show you guys more example using our chart. All right, let's just select one. Oh, let's select BNB USD. Let me just show of how a bearish mathematical triangle looks like following the rules that I just stated. The first rule that I stated is that what a bearish symmetrical triangle only formed when a what when the market is in a context of what a downtrend. So at first we already know that a symmetrical triangle occurs when a trend lines when there is two converging trend line symmetrical in what in nature. So which means first there should be a market structure that each trend line connects in this way. All right, there should be a market structure that each trend line connects what in this shape. Now, for it to be a bearish symmetrical triangle, it means that what the market must be in a context of a downtrend. So it means the market has been coming down. It means the market has been coming down, like the market, let's say the market has been coming down, coming down, or doing whatever it's doing. So it's been in the context of a downtrend before you start what creating what highs and lows. That after the trend line is connected, it looks converging and symmetrical what in nature. So what we expect when the market is in this structure is what it has to break the support trend line, not the resistance. So if the resistance is broken, definitely is not our bearish symmetrical what triangle. But on this kind of market structure, we expect the market to what break the support, because this market already is what a downtrend. Now this symmetrical triangle forming can be what its consolidation, whereby compounding its pressure, its market pressure. Like I use gas cylinder and gas for example. When you are compounding gas into a gas cylinder and the gas pressure can no more contain that cylinder and you keep forcing it, what will happen? It will kind of what crack or what explode. So that's the same thing that kind of happened on the symmetrical triangle. When the price kept compounding in this symmetrical triangle, getting smaller, tighter, and couldn't hold that market within that structure, what will happen? A breakout will happen. So in this kind of structure, we expect the market to what break out from the support. It will break the support. That's what we are looking for. So which means when we see something like this, we expect to what to short the market. Another thing that needs to happen is after the breakout, we expect what a kind of a retest and a continuation. You see that? And what a continuation. So basically, we expect that after all these movement within this structure, how do you what make your entry? Like I used to say, you can make entry before the breakout and afterwards the breakout. But you need to be what you need to be very careful when making entries before the breakout. You need to confirm that yes, there is a rejection before you have to short that market. So I said before you want to short within the triangle, you should wait for at least the third high. I'm talking about here. Talking about the third one. Let me change my color, please, so you can see clearly. I'm talking about the third highs. So you can short from there, or definitely you wait for a breakout and short after a retest confirmation. Note, you need to kind of wait for a retest confirmation before you continue the short. Reason is because the breakout can be a false breakout. You understand? And can still ride back to that channel, to that triangle. And when you now restructure your trend line, you find that a new pattern has been formed. All right. But if you wait for a retest and see a candlestick confirmation or a rejection once it touched that trend line, identifying for you that a new resistance has been formed. Just like when I said when we were teaching support and resistance, I said when the support is broken, a new resistance has been what formed. So you have to confirm that yes, definitely this broken support is now serving as what a resistance for you to start shorting what that test. Though most times it might not favor. What I mean by it might not favor is that by the time, maybe most times when you are waiting for that confirmation, the market might leave you and continue what falling. Apparently, you know that your signal was right, but you are just waiting for the right moment to enter that market in order to reduce more possible drawdowns. So most times the market might leave you, but when there's a retest confirmation, if you are trading only retest confirmation, you have higher win rates than when you are trading non-retest confirmation. Do you understand? So the only bad side is that you might miss a lot of trades, but most of your trade will be a winning trade. So what's the essence? It's better that most of your trades are winning trades and you miss most of the trade than most of your trade are losing trade because you try to trade every signal you see. Do you guys understand? Is there any question coming up? Okay, seems there's no question coming up. So you can kind of screenshot your Zoom in order to kind of master this how you expect a bearish symmetrical triangle to look like. I'm going to give you an instance of how I learned my technical analysis, especially when it comes to price action patterns. Knowing that price action patterns are not one, they are not two, they are not three, and I need to study the most important ones. I mean, these ones that you guys are learning now, but it doesn't end here. There are still more price action, but those are ones that you might not even see it in 2 months of a chart. You might not even see it in 1 year. You can hardly identify them. So we are only being taught the ones that you can frequently identify in your charts most of the times. So the best way you can master this is you need to have your own book. You need to have your own learning book, whereby whenever you are being taught a particular price action pattern, you need to draw the structure in that book, how it should look like. Then on the right hand of that drawing, you state the rules which you need to be able to confirm this price pattern, how you should enter how you can enter the pattern, and how you can also exit the pattern. With that way, when you keep going through that book regularly and trying to identify each of these patterns on the chart by yourself, you will keep getting used to it, and your psychologically your brain will start storing these images and these studies in your long-term memory, whereby you just open chart and you just be able to see it, without even having to keep looking for it. Once you open your chart, any pattern that is there, you find it easy to identify it because you have those patterns up here. All right, so these are 2 ways you can make entry on a very symmetrical triangle. There's nothing much different than what you learned yesterday. So the only thing just that is we turn it upside down. All right, this is bullish, this is bearish, but they still have symmetrical triangle. So how do you take your profit? The same thing. You have to measure a movement. Hold on. You have to measure a movement from your first high, or you can say from here, from your first low, if the low comes first. If it's the high that comes first, you can measure from here. It's still the same thing, doesn't matter. You have to measure there. You see that? You have to measure the movement from your first low to your first high. And and you have to move it from your your breakout or your retest, any of them, to determine your take profit. So which means based on what I just draw here, I can say that my take profit could be what here. I hope you understood that. You can write that in your book so that you will not, identifying these patterns, thread them, and end up not taking profits at the right time. All right. So you can take profit by measuring that, or you can take profit by identifying the closest what support. Your closest support can be your TP1. Why this one can be your what? Your final TP. I hope you guys are getting the information and will be able to apply it to your knowledge. All right, let's kind of see the examples that they gave us in our notes. All right, you can see what I'm trying to say. If you look at this measurement, that's something that I was trying to explain to you guys. You can see this measurement, and you can see they move this measurement to here too. So this is how you can easily identify your TP before what the reversal will happen that could take back all your profits. So this is just how simple what a symmetrical bearish triangle could be. So this is one of the two most fun patterns in our chart. Bullish symmetrical triangle and bearish what? Symmetrical triangle. Now let's see if we can find a bearish symmetrical triangle on our chart. That should be quite easy because the market has been in what? In a bearish movement. So let's head over to our chart and try to identify a bearish symmetrical what? Triangle. Wow. 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 All right. If you look at this, there's a line I draw here. I can't remember when I even draw this line. This line might be leading from a previous support that I connected previously, but I can't remember when I even draw this line previously. And after all the blah 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 is happening in the market, and it came here, you can see how it is serving as a support here, serve as a support here, and it keeps serving even here, even serve as a support what here. So this is how a support and resistance could what be helpful. So if I had this line, maybe I just take my chart because I haven't been in trade for some time. I was quite busy, so most times I just need to study before I can come to this class. Whenever I had the chance. So if you look at this see, you find out that this line I draw here could be very, very helpful. Showing me that okay, whenever this gets to this point, it will bounce back. When I get to this point, it will bounce back. And if it should break, that means what a continuation of a downtrend has started. But let's quite look for our symmetrical triangle, bearish. Let me see if I found one. Let's see if I found one. Perfect. Perfect. What do you see here? A bearish what? Symmetrical triangle. Now, like I said, you can look, if you look at what I just draw, you find out that this market, wait, let me first remove this line that was here so it won't block your view. All right. If you look at this now, you find like I actually said, a symmetrical triangle can be called bullish, bearish, when it's in the context of a downtrend. If you look at this, you find out that this market has been coming down. You find out that this market has been what? Coming down and created what? Each first what? Low. It bounced up and created what? Each first what? High. Came back again and created what? Each first what? Low. Second low. Keep creating another low, third low, and even create the what? the third what? Low. The third high. The second high, sorry. So, but most times, before this second identify high formed, most of us must have even like keep our lines here. You understand? Most of us might have keep our lines here, but that's why we also talk about the retest. And if you look at this retest, you find out that there was no what rejection, saying what a false what retest. But let's basically say we keep it here. But if it was me, I'll keep it here. That's when it will look symmetrical in nature for me. You see, after the breakout, a retest what happened. Hold on, let me, a retest what happened here. Now, this retest was not able to what touch that trend line, but that was a what a retest. And if I'm to like draw a support horizontal trend line, let me see if this retest actually touch that trend line support. Okay. All right. Now, drawing the support horizontal trend line from here, identifying that after it got broken, what happened? It formed what? A resistance. And that was where this market was able to what? Reach at a test before it was continue what? Falling. This means that the momentum of the bearish was what? Higher. Now, let's try to measure, based on the way we used to take our profit, let's see if our take profit was able to hit before what? The reversal. This take profit is very, very important because most of the time you won't know when to close your trade. You understand? You won't know when to close your trade and you end up stating maybe you have moved your SL to your entry and you end up having your entry being hit. So let's just try and measure and see if it actually hit our TP before we could close the trade. Like I said, from your first low to your first high, it could be vertical. You can keep it vertical, just like you saw it on that book. If you can keep it vertical, or depending on the momentum, you can keep it this way. But vertical is very, very what? Better, as illustrated in our book. What do you see? It hit TP before the reversal could what happen. Let me try to put it slopey by connecting from the touch that touch. What do you see? It was also what? Able to hit our what? Our TP before what? A reversal could what? Take place. You see what happened here? Closely after this TP was hit, a reversal that possibly what? Hit your entry price took place. So, but if you're not able to use this to identify your TP measures, you may end up not being able to take your profit. Maybe you think it will fall very, very hard. You now keep waiting. You'll be saying BTC4, and you end up not being able to what take your profit before you a reversal happen. So based on ignoring by this way, I have found out that it mostly a reversal used to happen after this TP has been hit using this way of setting what they said unrealized profit is never it's not yet profit until you close that trade. It's still unrealized because you might close your eye and you have not secured anything. So it's only a realized profit when you close that position. Even That loss is not a loss until that position is closed or what liquidated. For example, you invested $1,000 from BNB, and due to adjustment, you are now seeing $900, saying that you have lost what $100. Actually, that's not a realized what loss. That's what unrealized loss until you decide to liquidate what that market. So maybe you say, I don't want to BNB again, I want my money back. Realize. But if you still keep on an unrealized profit, 1,100, showing that you have earned extra $100. You have not earned it. It's still what unrealized until you liquidate that market or sell that market. That's when what that profit is now what a realized what profit. You better have that in mind. So not when you are trading, I see $100, you say I'm $100 profit. That's what unrealized profit. You need to be putting it very right until you close it, or any profit you are able to close. That's what you actually want. Realize as what profit. So I believe tonight I was able to what teach properly on what bearish symmetrical triangle, including how to identify it, how to make your entry, and how to what make your what exit. So for me, I could quite advise that this should be one of the most pattern you should what looking out for on your trading activities when you want to analyze your chart. This is one of the patterns you should looking out for. Another pattern that is very, very interesting is the flag pattern, which is the blue flag and the bear flag. We will get there. Just hold on. So in case if you have any question, please, I'm ready to entertain question. Any question? Any question? All right. Since we don't have any question, but if you can hear me, please, can I hear someone say something? If you can hear me, because I
We
kind
can
of feel
hear
like
you.
someone.
I can hear you.
All right. Good. Okay. Let's check out the next. Triangle patterns we are going to treat. So most of our patterns are actually what triangle, symmetrical triangle, and now we're going to continue with what? We're going to continue with ascending triangle and descending what? Triangle. They said ascending triangle is a bullish chart pattern that consists of two trend lines. One, a horizontal trend line at a level of what? Resistance, defined with no fewer than two what? Swing highs. All right. And upward a series of what? Higher swings or pivot towards lows, which is I call lows. This is very simple. Let me just before I even show you, let me just go and draw what they are trying to say, just by what I read here and also what I know of our ascending triangle. Based on what they just said recently, this is what they mean. They said a horizontal resistance. A horizontal what? Resistance. Horizontal means a straight line. A line, straight line. Let me just show you. This is what they mean by horizontal. Sorry, this is not what I mean. Can see what you can you see the name there? Horizontal what? Trend line. So this is the first trend line that come in place. Then they also say an upward slanting support. An upward slanting what? Support. It means but it's upward slanting. It's just like a chart that is going up. You know, a chart that is going up is not horizontal, it's not vertical, but it's what upward slanting. So this is what they mean by upward slanting. Sorry. Sorry, let me clear this. I want to click chart. First, let's draw a horizontal trend line, then upward slanting. Upward slanting. This is what they mean by upward what slanting. It's not. Hold on. Upward what slanting. So it means that when you connect your trend line in a chart, when you connect a trend line in a chart and its structure appears in this way, that the resistance formation, why the support is what upward slanting, meaning that the market is riding this way. You know, the resistance are kind of straight, while the support are upward slanting and compounding. So this is what they have told us so far, that the structure look. Just wanted you guys to be aware. He said a horizontal trend line at a level of what resistance, defined with no fewer than what 2 swing highs, which means high. There should be at least 2 highs or what 2 lows. This is why they told you that no fewer, it can be less than 2 what highs. Why an upward slanting trend line connecting a series of what higher swings or pivot what lows. The pattern starts an underlying price decline from a swing high, much like a pullback buy. The price then rallies up to the prior swing highs and stalls. A second pullback occurs as overhead resistance is decreased and the stock then form a higher swing low, blah, blah, blah. This occurs over and over again until a series of equal swing highs. That's a series of equal highs, which when you connect, it becomes what? Horizontal. But they are equal. See what you just did now. Mute your mic, please. And higher swing lows are formed. The power of an ascending triangle can be greater after a powerful upside move, which is the possible increase of underlying support. Technical analysts realize that ascending triangle can be stronger when the swing high that between the pattern is also at an all-time high. Well, this is what it looks like. It's a bullish pattern. Ascending triangle is what? A bullish what? Continuation what? Pattern. Or a bullish what? Pattern. It simply means that when you connect a series of highs and lows, and the resistance is what? In a horizontal form, while the support is what? Upward slanting. That's a sign of what? In an ascending triangle what? Formation. Just like you see here, you can see that our resistance are what? In a straight what? Line, while our support is what? Upward was slanting. Even in the live chart example, the same thing, the same thing. And before it was connected, there was at least 2 equal highs and 2 upward slanting what? Lows. So this is just a simple rule for you to be able to what? Identify what? An ascending triangle. So you should be able to differentiate between a ascending triangle and symmetrical what? Triangle. Ascending symmetrical triangle are 2 converging trend lines. So like the resistance is coming down while the support is coming up, and they are pointing to each other, looking what converging. While the ascending triangle, the resistance is horizontal, while the support is what upward slanting. So let's kind of look for this in our chart. This will be difficult because we are actually in the what a bearish market. So, but this is a bullish market. Let's see if we can find one very easily. All right. Mm, 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 mm. Oh, find one. Hold on. To find one will be hard because we have been in a bearish market. It's a descending triangle that will be much easier. Find. I'm gonna miss it. Mm, hold on. Let me do something. All right, all right. This is a typical example of what? In an ascending what? Triangle. Now, if you look at this, you find out that our highs are connected what? With a horizontal what? Trend line. So which means two series of equal highs has been what? Formed. Why at least two series of lows which are upward slanting. If you look at our trend line, you see that is what? Upward slanting. So this means an ascending triangle has been what? Formed. And you can see what happened after the breakout. Every test what? Took place before what? The normal movement that what? Performed. So this is an example of an ascending triangle in a real life chart example. And we were able to find this out in less than 5 minutes. So let's talk about how you take your profits, how you can make your entry in a symmetrical triangle. All right. For your entry, sorry, in an ascending triangle, for your entry, your first entry can be after the third touch, as in the first rejection. This is the first one, this is the second one, this is the third one. So you can make your entry at the third one after it's rejected, not just when you touch it. After you show the sign of rejection, you can make your entry, take your first profit at the touch or close half or wait for what? A breakout. So second way to make your entry is after the breakout, and this will test that what took place. So these are two ways to what? Make entry on a what? An ascending triangle. And for your take profit, you have to measure from your horizontal line and your upward slanting line, measure from the top to the what? The first what? Low. This is what I mean. You have to measure from here. You don't have to measure from year to year. You have to measure from year to what? Year. All right. Then move it. Sorry. Now move it movement. Answer too big. Move it to movement from this breakout. Determine your what? Determine your possible TP. Sorry, my answer just big, I guess. All right, this is it. So you can see based on this, we are trying to say that our TP will be what? Yeah. So whatever happens doesn't what? Concern me. I have entered this trade and I what? Exited what? This closely after this TP was hit, the market did what? The market reversed. You see that? And out of here, you might even be able to, you might even just close this trade here without before the continuation must have taken place. But at least you have taken your realized profit. So this is just how an ascending triangle looks like, how you enter the trade and how you exit. Now also note that for you to trade an ascending triangle, most of the times you should be looking at if the market is what? An uptrend. Remember what they taught you before? The trend is your friend. All right, so you need to identify the trend before you what? You trade. So if the market is actually in an uptrend already, that means you have a what? A higher possibility for what? A win rate. But if the market is in the ranging, it's still possible for you to what? Have a good win rate. But if the market is a bear market and you see this kind of structure, it might not really give you the win rate you are kind of what? Looking out for. Any question on an ascending triangle? Someone has a question?
I think there was something on the chat. Let me just check.
If someone asks, what happens if you see a double bottom inside a triangle? You used to consider it as a downtrend. Now look at this. All right. A double top can form as a pattern can form inside patterns, even inside pattern. Do you understand? On a triangle pattern, definitely it's not of what a short term.
Sir, I cannot see your screen.
Can you see it now?
No.
You can see it now, right?
Yes. Thanks.
So as I was saying, someone asked a question, what happens if you see a double bottom inside a triangle? You still consider it as a downtrend. All right. That's not what you used to consider what? A downtrend. You need to look at the overall what? Market. And definitely where you found what? A double bottom. Definitely, we have not even reached this pattern. All right, you don't just confirm a double bottom once you see a true rejection. at the bottom? No. So I think he actually jumped, and I didn't even know that he even jumped. All right. So just keep your question to get that place. But for a double bottom, that is how you confirm a double bottom. The double bottom must break its neckline before you could call it what? A double bottom. So let's not just drop it in there. All right. Mr. Mr. Tapelo, I think that's you. So just hold on when we get there, but I think I've kind of answered your question. But when we get there, you understand more how to confirm a double bottom. So you can't just call it a double bottom until a neckline is broken. If a neckline is not broken, it can never be called a double bottom. I hope you understood. Understand my English bad. All right. So anybody with a question on ascending triangle before we move to the last pattern for the night, if I think I have time. Okay. I suppose end the class, but let me just, if we don't, we have limited time to finish this. Okay, so I'm going to teach one more pattern before we end tonight. So any question on ascending triangle? All right, no question yet. Okay, let's continue. Now the next pattern we have here is what? A descending triangle. Just like the name applies, descending. You use to identify what? Downtrend or when to sell or short the market. So the first one they say it's very simple. It's just like vice versa. When you turn the ascending upside down, when you turn the structure upside down, that's how what the descending structure looks like. Let's take the first one. It said a horizontal trend line at a level of support defined with no fewer than 2 swing lows. We're talking about your support. Instead of being upward slanting, it will become what? Horizontal. All right. In ascending, your support is what? Upward slanting. But in descending, your support is what? Horizontal. With no fewer than 2 what? Lows. Before you go and connect a trend line, when you just see one low, it will not work. All right. You need to see at least what? 2 what? Lows. This was one of the first rule I gave when we talked about was trend line. So you should have it in mind before you will be drawing imaginations in your chart. Instead of you drawing what the market is saying, you are drawing what you want the market to do. And you end up trading what the market is not doing. So the second one says a downtrend, a downward slanting trend line connecting a series of lower range or pivot towards highs. So they're talking about highs. That means what? Your resistance, instead of being horizontal, just like in a ascending triangle, it will be what? Downward slanting. Downward what? Slanting. Resistance is downward slanting, and support is what? Horizontal. So what are they saying? Let me just say what they mean. All right, this is what they mean. That the horizontal, the support will be what? Just horizontal, while the resistance is what? Downward sloping. Downward what? Sloping. So it means that when you connect 2 highs and 2 lows, the structure should be like what we just draw, like this kind of what? Triangle. So it means that you expect the market to what? Range within this kind of structure, like this. This is how what? A descending triangle looks like. First rule, a downward sloping resistance. Second rule, a horizontal support. Now you expect what? The support will be what? Broken at this stage, at this particular structure. you short on what? The retest. So there's no much difference between it and the ascending triangle. It's just like vice versa. When you just turn it upside down, the vice versa of it. The same way you make entry, which means for you to make entry on this kind of structure, you short on the third word resistant, or after the breakout, they will test. Now, if I've forgotten to say, you only buy at a support and you only sell at a what? Resistant. Have this in mind. Don't go and be selling at a what? A support. Don't go and be making entry at what? A support. A sell entry at a support. You only sell at a resistance, which is here. All right? And buy at what? Support, which is here. This line now is kind of a support. This is where you can buy whenever you see support. Whenever you are consulting your entry, drawing your patterns, trying to make your entry, you only sell at what? A resistance. And buy at what? A support. Please don't forget this. So you will not be carried away by your emotions or making some false entries or false trade. Sell at only resistance, whether trend line resistance or normal or support and resistance. After making your drawings and everything, make sure that your entry is at what? Your sell entry at what? Resistance. While your buy entry is found at what? The support. This will really, really help. I might have forgotten to say it. I don't know whether I've said it before, but it just came into my mind. All right. So I've showed you guys how you can make entry on a descending triangle. Let's talk about how you can take your profit. You can take your profit by measuring the distance between the first low towards the resistance. So what do I mean? Practically, this is what I mean. Sorry, let me. All right. All right, measure the distance from here to what? Here. Then move it from your entry, that's the retest, meaning that our TP is expected to be what? Yeah. We're also going to do a practical section, identify a descending triangle, and know whether our TP was it using this word method. So, but before then, let's see more of what they say here. So this is an example they give to us. You can see what? That the support is what? Horizontal. While the resistance is what? Downward sloping. The same thing with the real life chart what? Example, which is this. And you can see how as the measure for you how to mark your TP. It is from here to here. They move it from your into here. So I also want to give you another tip. All right. When you measure this, all right, when you measure this, and you find out that there is a resistance, or let's say for this one, that you find out that is a support closely, maybe it's not many not to reach the tip of that your measurement. Please move that your tip to that support. Because the market might, once you get to that support, it will bounce back without getting to that TP. Like I already said before, I used to also use support and resistance to make my what, my TPs on my trades. Then applying these measurements too. So whenever you do this measurement, I found out that Kevin says support. When you're doing, let's say for this Senate triangle, your TP is actually at the support. So you find out that there's a support closely, very something just like a little difference from your measurement. Please, if that measurements are moved that TP to what? That support. All right, because my market can get to that support and bounce back without reaching that your what, your TP. So always be on the lookout for all this. Make sure you are writing this thing down, because I'm not about to say it again. But as I'm teaching this, I'm kind of saying it. I don't have a book. I'm just saying from what I know, from how I practice my trades. So it's kind of teaching you an experience. So you need to write it down before you can be able to master it over time. So before we end, let's try to look out for a descending triangle on our chart. Can we find one? Definitely, we should. Descending triangle. Let me see if I found one. Did I find one? I think I did. All right, this is it. This could be an example of what? Hold on, let me connect this one. This could be an example of what? Your descending what? Triangle. Having a downward sloping and a vertical what? Resistance. You can see after they break out, there was what? A retest here, which could be your entry. And if you measure from here to here, you find out that the TP was hit. Maybe we can say this one was not really clean. Let's look for a clean one. Remember that all these are not actually used to be clean. All right, because this is the live market data, buying pressure, sell pressure, statistics, blah blah blah. So it might not be clean, but when you finally connect, you should be seeing some structures that look what that way. Okay, I think I've also found a clean one. This one is clean. Yeah, this one is clean. This one is clean. Perfectly clean. This one is what? Perfectly clean. Perfectly. A perfect illustration. You can see the market was what? In a downtrend. If you look at this, the market was coming what? Down. Before this was formed. See that? And a breakout what? Took place. Now let's try to measure our TP and see whether it it's really favored us based on the way we measure our TP. You see that this strategy work what most of the times. This is the first low, but let's kind of measure it from here. Let me call this the first. Let's measure from here. Most of you might measure from there, so let's just use what general everybody will do. Let's move it. Sorry. All right. All right. You can see there what that happened. You see this price was the market was made what each reversal. So if you look at this now, a test didn't happen at the first time, but later, like I usually used to tell you, when the support is broken, a resistance is what formed. Now, if you look at this later in the day, when the markets came back, this particular trend line here actually came to form a new what resistance, which resisted this market and what push it more what further. So support and resistance and price patterns what work hand in what in hand. So when you have both of this knowledge, you'll be able to what have your winning what trades. I hope I've been able to discuss better on ascending and descending triangle tonight. If you have any question, please ask your question. If you have any question, please ask your question before we close the class. You can unmute yourself and ask a question if you have a question. All right. Seems there is no question. Thank you all for attending class tonight. This is where we are going to draw our closure. And I appreciate you guys for your time and attendance. And I believe you guys will be available tomorrow for lecture. Someone asked